How's it going, guys? Welcome back to the Bootcamp. I'm Andrew Macre. Welcome back. Episode 16. Today we're going to be talking about identifying key levels for trimming to de-risk your positions. I'm going to talk about my theory about how we get in these trades and how we want to size out of them, how we would want to size back in on them, etc. But we're going to use two concepts that on their own aren't necessarily that great, but in conjunction with a mech model, with something that is a validation and not a guess, you can actually get ahead of pretty shitty reactions in price. We're gonna use a trade I took today. Today I made like 3 or 4 racks, and I'm eligible for 3 max payouts. I made 1.4K on 3 accounts, eligible for 3 max payouts. Minky. Very, very good. I'll be taking those tomorrow. Probably I'm gonna finish off my winning day tonight. We have a bank holiday on Friday, but very, very exciting. Let's talk about the trade I took today, and we're gonna teach this concept using that. So let's get into it. So basically, the trade I took today was super, super simple. You guys might notice this thing up here. This will be given to the indicator people very, very soon. It's just a way to automate the process so you don't have to keep track of everything on your own. It'll be better for streams. But remember, our entry model, what sets the pointer range control is an untapped pointer, basically a pointer reacting to an untapped FFPG. That is what's going to get us in a trade. And it has to be between both equities, otherwise you're gonna be moving against the grain. So what do we have happen here? 5-minute pointer reacting to that set of FFPGs. If you go to ES, you'll see the exact same thing happens. And this is where we have the alignment between equities. And you'll see we'll get like an A+ notification here. Boom, there we go. So this is the best type of trade that we can have. Now, when we're looking up the barrel in price, we're looking at, hey, where do we want to trim? How do we want to size out of this position? We are in a winning trade now that we are taking these correlated pointers off of untapped FFPGs. The question becomes, how do I get out of this trade? How do I size out of this trade? Now, we talked about the 2 techniques in the bootcamp so far, which are trimming at the first FFPG in price. The reason why we want to do this is in case price consolidates and we PO3. Where are you going to PO3 off of? You're going to PO3 off of the first available FFPG. That's how efficient price action works. You're going to immediately reject off of that or around that range in price and then move lower or higher if you're taking a short. We also talked about in the past, we talked about trimming at the FFPG at EQ range. If you guys remember, that's something that you can do. It's totally fine. The best thing you can do is to always trade micros and have enough contracts to be able to trim. The last thing you want to have is like 3 micros in your trade and you let them all run to fucking break even or even loss because you weren't reducing your contract size, and you couldn't reduce your contract size, otherwise your trade was gone. The best case scenario is that you have enough contracts to trim and enough to keep running for the pointer to exit, right? Because you can keep going and going and going past these trims. These trims aren't any reason to get out of a trade, but reason to reduce your exposure to potentially inverse market behavior. We talked about this in the last trade recap. I think it was like a week ago. I talked about introducing this idea to you guys. What mech is it's a validation, right? It's always going to take extra confirmation to get you in a trade. But once you're in a winning trade, and we know what winning trade conditions are, the goal is not to immediately get out. We want to ride it, but we want to reduce and be a little bit more liberal on our trims, on our reduction of our exposure, right? We want to be conservative on our way in and liberal on our way out. So it's kind of like you're letting loose of your contracts way sooner than you would actually enter them for an inverse, right? So this is a A+ setup. We have point range control forming between both equities, as indicated here. Now the goal becomes, okay, where do we want to trim? We know that our exit's going to be some type of pointer. So basically when we're looking at price, when we're looking at this potential trade, we are looking at all of these untapped FFPGs as potential areas for reversals and highs for areas of reversals and all that good stuff. There's a couple techniques you can use. You can keep using the FFPG to EQ range. You can keep using the first FFPG to trim on. So like if we're looking at this trade, you can say, okay, in fact, the indicator is telling us to trim here because it's the first FFPG after our new leg, our new point range control. So you can set this as a trim point. You can set the FFPG to EQ range as a trim point. We'll turn that on real quick to kind of demonstrate that. It might even be the same one. More often than not, you're actually going to be trading into an EQ range. This might actually be, okay, this is actually the pre-market, so there isn't going to be an EQ range yet. That gets closed on the 9:30 open. So assuming this is a 9:30 trade, more often than not, the first FFPG in the leg is actually going to be at EQ range. It's always a good idea to trim at the first FFPG. This can be your TP1 in essence, okay? If you want to think about the structure of a mech trade, your TP1 will be the first FFPG in price, because on the assumption that this is the highest point that we're going to go in these longs, you always want to think in worst case scenario, then at least you're able to get contracts off so that if we retrace lower and get a pointer, you're basically breaking even profit, right? This is how we're able to conserve a lot of our trades. You can also use additive trims as well. We talked about that in a previous episode. I'm gonna make a full-length video on it in the future, a small 15-minute video to re-explain, to go over it one last time for you guys. But the additive trim idea is basically, if you physically can't reverse, then why not add contracts that are guaranteed to move between areas that we're going to push through, and then set those contracts on a FFEG that we have to move to in order to, if we know that every single implied move starts and ends with a pointer reacting to an FFEG, if you have no FFEGs, what does that mean? And it's just nothing but white space. Add a couple extra contracts on that inefficient break, and you'll see that gap happen. So for example, like in here, if we inefficiently break over all of these FFEGs, you can set a limit order here. Once this is 100% inefficiently broken over and these are all gone, we have to at least move here before we can get a reversal, because every pointer must react to an FFEG in order to get a leg down. And so, you know, you might get volatility, but it's not going to be sustained. So we can do a little additive trim here. But again, I'll make a full-length video on that. Today, we're just talking about trims in a mech trade. So you can use the first FFEG or FFEG DQ range for a trim. The second trim, and this is where all of our trims can kind of become mech. They're not going to be, you know, standard like the first FFEG or the second FFEG or a high or anything like that. The second trim that you want it to be is you want to identify key areas in price. So we're going to use two techniques. We're going to use deviations called break and structure deviations, and we're going to use low volume nodes using the volume profile to align with untapped first fair value gaps to decide where we want to trim. That is essentially what we're going to be doing, okay? We just want to find where they all correlate. So a low volume node is just a depression in a volume profile, an area with inefficient price action or an untapped FFEG. So we can align the low volume node with an untapped, with what a deviation is. A deviation is basically just you're projecting market structure through a standard deviation in price. So if you have a break in structure, you're projecting that each deviation of that break in structure out by one standard deviation. And so we can draw them using high-res highs and high-res lows and FFEGs. So I'll teach you deviations first. That'll be our first goal. We understand the first FFEG trim, but now let's talk about the deviation. So the deviation is going to be in this fib retracement. The fib is bullshit. The fib is a style of deviation. It's deviating by the Fibonacci sequence. But what you want to do is just go ahead and double click twice, go into your settings, and make them look exactly like mine. You want your settings to look exactly like this. Your trend line, make it all white, make it all the same color. And then you want to make 0, 1, and then this is just going to put the midpoint between the 0 and the 1. This is between your sweep and your break in structure. And then you want to deviate by 0.5 on each one of these. I go to about 4.5. That's as far as I ever really need. You can actually make it double-sided, and this is going to be really important in the future when we're going to talk about inverse breaks in structure. But this is really all you need, okay? Nothing too fancy. Just copy the settings down, and that's what we're going to use. A break in structure deviation is just finding the most recent high-res high or high-res low, and then finding the break in structure that happened and using that to project the deviations from. So if we're looking at this particular area in price, there is no real confident break in structure that actually happens. The only thing I would say maybe is this high-res low. You want to use the first high-res low before the break. Basically the current market structure, right? The market structure low, you want to use this high-res low. And you could use this high-res high, for example. Oftentimes where there's FFEGs, that's where you'll be able to find those confident breaks in structure. So a good example would be this high-res high. You see these FFEGs. Well, how do these FFEGs get created? The inefficiency in price here on this high-res low. So we can draw a break in structure deviation rooted from this high to this low, or this high to this low, basically summarizing projections from this high to this low downward. So we can do that if we wanted to. So for an example, we'll just kind of draw that in there. Go from here, the first high, the most recent high-res high in this market structure. Whoops. And we can route that to either one of these high-res lows. They're both totally valid. There's no right or wrong way to do this. Either one of these are totally valid to draw projections from. And then we can use these in conjunction with untaps to make better decisions. But you need to be in a correct trade in order to make this logic make sense. You need to be in a winning trade. You need to be in a mech trade in order to use this. You don't want to just fucking limit order this shit, please. Charlie Kirk, if you can hear me, please do not limit order these fucking concepts. This is not squid, bro. This is literally just aligning principles to make you a better trader, using other techniques to make you a better trader. Like I said, conservative on the way in, liberal on the way out. So if we're looking at this, there's really no good break in structure deviation that we can draw in price here, because if you look, it's really small. You want to find a confident break in structure. But what we can do is we can find what low are we respecting in market structure that's still valid, and what break in structure deviation could we still potentially have in here that would be valid. So if we look to our left-hand side, are there any lows that we preserved in price? Well, here's our low here. Let's go to our left-hand side. We can see that we have a break instruction deviation right here. We have this low. No real high to root it from, so this isn't that great. If you were to draw it, you could do something like this. It doesn't really project that far, if I'm being honest, especially where we are in price. So this isn't really that valid. Okay, are we respecting anything else that maybe we can draw? Well, take a look. Follow the low, track the low. It's at 7530. Track that low. We see that we have a previous break structure deviation this way. High res high, and a FFG's forming. They're obviously gone now. They're mitigated at this point. FFG's forming in price here, and we see a confident move to the downside. And so what we can do is we can draw a inverse deviation. So at one point, when we were looking at price from here, we were looking at deviations like this, right? Here's your high res high. Here's the breaking structure that we have. This is totally a valid deviation to draw, but now it's no longer being used in the same way. This is where the normal toolkit can be really helpful. I don't have it on right now for FFGs. But we can clearly see we are still respecting this range in price. This is kind of like the breaker block idea, right? Order block, breaker block, FFG, IFFG. These are, FFGs. This is an area in market structure that's still being validated, right? If we look to our right-hand side, we're still respecting the range in price. And so what we can do is we can just flip our deviation the opposite way. Whoops. We can just click reverse and we can flip our deviation the opposite way. And this is one valid way to draw deviations. Now, another thing you have to remember is we're using both NQ and ES. We also want to hop on NQ and see, are there any deviations that we can draw in price here? And if we go to our left-hand side, we can see there's a pretty clear deviation that we can draw. What are we respecting? Look at this low. What lows are being preserved? This low here. What break and structure deviations can we draw on this market structure here? Here's your high res low. Any good breaks in structure? Yeah, there's a really good one right here. Whoops, right? We'll reverse that. And there we go. This is a really solid deviation that we can draw that we're respecting in price. You could do this on and on and on. Obviously, I've already seen this price. So again, like I already know it's gonna work in this case. I took this trade today. So this is a deviation that we can draw with this respected market structure. We'll go back to ES. We're gonna flip between both. Actually, we're gonna stay on NQ because we're gonna use the low volume node now. So now we know how to draw deviations. We have break and structure deviations. We have inverse break and structure deviations, which are just areas in price that we're still respecting. So if like, for example, we're looking at, if we're trying to find deviations from this market structure here, and we don't have anything to go off of like this one here, we can move to our left-hand side, and we can draw inverse deviations from this market structure here, which technically may still be valid if we look at price. You see we might still be respecting these FFVGs. In here, for example, you might want to draw something in there. This one's fine for our purposes, though. We can just use this for now. It's totally fine. Now let's go and talk about the volume profile. The volume profile is literally just a histogram that shows volume over price. Okay, so if we want to throw on a volume profile, yours will look different than mine because I have good settings. I'll give you my settings. We'll just anchor it randomly here. And all you want to do is double click your volume profile and go ahead and copy my settings down. I use ticks per row size of 2. This is really going to make it really fractal so you can kind of see the actual. There are better software for volume profile if you want to use that in your trading. I'm not going to use that for my trading. I just use it for identifying key levels on the open. This is just to align with our deviations with our untaps. I'm not going to use it in real time. I think people can get really lost doing that stuff. Whoops. Let me double click that again. Ticks per row, it's going to be the row layout. Then we want to use row size of 2. For the volume, you want to use total. And then for volume area, is value area volume, 40. For style, go in here, make it all the same color. Turn everything off, and you can turn on POC, point of control. This is really just where essentially price spent the most amount of time from a volume perspective. You can use this with EQ range if you want to. You can use untapped FFGs at the point of control for trims if you want to. When it comes to the entry, the conditions are very strict. When it comes to the exit, it's based on a number of things. What's your psychology at high size? What's your psychology at low size? There's so many different ways you can trim. The way you get in the trade will be the same among all traders, okay, if you're studying Macre the right way. The way you get out, I don't really care. I'm gonna tell you what I would do. If you wanna trim at an EQ range, if you wanna trim at a fair value, the first FFG in price that you're moving into after you have your point of range control, and then use POC, use EQ range to take your trim at the next FFG. That's totally fine if you'd like to do that as well. So make sure your settings look like mine, all this the same way. I think that's all you really need. How do we draw a volume profile? How do we root a volume profile? You just want to find respected market structure. So obviously we know we're trading to the upside. So what we're looking to do is find levels in price that are inefficient. So we want to root the volume profile where we have data coming down, since we want to use those levels with our untapped. So there's a couple different ways you can do this. We'll show you a couple techniques. We'll use the one down here. This is respected market structure, still valid market structure. Go to our right hand side here. What do we see? See these really high volume nodes. I don't use high volume nodes in my trading. I think that's another big retail trap. High volume nodes and low volume nodes. High volume nodes are going to be these peaks, high volume areas in price, and these low volume nodes are going to be these troughs, right? These steep cliffs, these drop offs, right? Drop off, 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 drop off. I have a separate chart for my volume profile that I use because I don't like it on the same screen as my Macre trades. It's just, it can get a little bit frustrating. And I like to have my key level chart on a separate chart where I do my execution. So like for example, if I'm taking like on trade C, I'll draw a volume profile, I'll draw my deviations, and I'll have my Macre stuff here. I'll go here and say, okay, I'm executing, I have my actual, trade on trade C. I can draw limit orders that are directly affected in price. I don't have like my trade debate open. I'll have trade C and I'll draw my volume profile, draw my low volume nodes, draw my deviations, and literally drag the trims where I see them on FFEGs. It's a lot easier to do that than put it all on one screen. So a low volume node is just going to be one of these valleys in the volume profile, an area with inefficient price. So we can do it a couple of different ways. We'll get a much bigger volume profile. I think that'll cover the range a little bit better. We'll go here and we'll draw a volume profile going down this way and moving down this way, and we'll do another volume profile. You can change the color of these to help stand out. One thing I like to do is I'll do like a daily volume profile and a session volume profile. So root it at the day open, like the Asia open, from the high or the low, whatever respective market structure you have, and then do another one from the current structure that you have, whatever session you're trading in. So if you were to do this, so for example, we'll do an example of this. We'll go to the high of the session so far, which would be this guy here, high of the session, and then we'll do the low of the session here, and then we can go here and we can turn all of these black, I think, make it contrast. Oh man, I wish there was a much better way to do this. I think I saved a template. Okay, yeah, there we go. So you can make them contrast if you want to, session based or the daily. There's so many different ways to route this. You can also do current market structure, the most recent market structure, like from these highs down. You can do that as well. There's so many different ways to route the volume profile, and there really is no right answer. Use as many as you need to make it make sense. I don't care if you're trimming heavy in here. So we'll go in here and we'll do the one that I did for this particular day. I did this low down here, and I did this high up here. It's gonna be a little bit weird. I think I have to go the other way around because make this white. Oh, I'm gonna have to go the other way around. Fuck. Actually, it's not a big deal. We'll just go blue. There we go. Looks a little bit better. I would have two templates for these, so you don't have to do these every single session. Okay, so let's go to our entry, and all I'm really trying to do is find. Oh man, that looks fucking ugly as shit, bro. Hold on. That looks really ugly. Let's do this. There we go. Much better. Well, all we want to do is we want to find low volume areas in price, these valleys in price, and we want to line them with our deviations as well as using ES. So we'll go in here, we'll draw all these low volume nodes. There's one right here you can see shared between both equities. We've got very clear one right here, right here. Any of these are totally valid. We'll just go here. Let's go zoom in. This is what's good about making it really fractal, is that you can see specific numerical areas, and it's not like all summarized these big fucking rectangles. You can see individual prices. I might actually need a bigger volume profile. I think I need a much bigger volume profile. Yeah, we're gonna need a much bigger spread. I thought I covered the range. Yeah, we're gonna need a much bigger volume profile. We can go from here. Boom. There we go. Might even need a bigger one. We can go all the way down if we want. We can start from all the way up here. There we go. Okay, we can draw in here, low volume node, here, low volume node, here, low volume node, here, and here. This should be fine. I think this will cover our range well enough. And then all we want to do now is we want to find low volume nodes around deviation levels, around untapped FFEGs to predetermine as areas that we want to trim on. So if we're already looking in price here, I'm looking up this area in price. Let's pick some FFEGs. We can clearly see that this set of untapped FFGs aligns with our low volume nodes and has a deviation around it. Now, a lot of these examples aren't going to be as good. Like this is a kind of a shitty example. But I'm gonna go ahead and decide that this FFEG set here is going to be one that I'm gonna preemptively trim on. I'm going to trim on this ahead of time. We have our entry, we're nowhere in these longs. I'm going to trim on these untapped FFEGs. Looking up price some more, we don't have a whole lot to work with, but I'm definitely going to do some trims on this set of untaps here, because we have deviation and we have low volume node aligning with an untapped FFEG. These are the two sets of FFEGs on NQ that I'm going to preemptively trim on. Now we have to switch between NQ and ES. I don't use a volume profile in ES because it doesn't really matter. I'm using NQ. You want to switch between NQ and ES because ES is going to have potential untaps that it might have in price, like these guys here, that might align with what we're looking at. Not to mention, some people, they forget this, is you need to draw new break and structure deviations as they form. It's super important not to forget that detail if they were to, create any confident break and structure deviation. So we're in these longs, right? Imagine we're in these longs. We'll take 10 micros as I did. You can do your first trim or a little bit late to our entry actually. You can take your first trim at this untap set here if you'd like to, whatever you want to do. And we'll just switch and toggle between our equities. This new indicator will actually do this for you, hopefully is the future, where we can have more than just the first trim set up on this trade. Like the previous, if you saw, it only outlined this first FFG in range for the trim. The future is we want to have it find the low volume nodes and find the deviations for you and just kind of plot the FFGs that you want to trim on. We'll let price do its thing. This is a trade into the open. So what are we doing here? Oh, I guess the indicator did, maybe he did fucking develop that. Cool. What are we doing here? Obviously gonna trim, move into a deviation level. Now I wanna make it clear, deviations don't actually do anything. Like deviations only work because enough people say they do. Deviations are not something that I would take trades on, but in conjunction with a bunch of working principles, it actually is kind of helpful. They don't work for any other reason. There's no bank fucking positioning themselves on deviation levels. It's just people, it's just support resistance, right? Enough people are agreeing with it, then obviously it's going to fucking work. We can align it with untaps, we can align it with low volume nodes, two volume centered things with price that actually do something. We can make action with this. We're trimming here 100%. Move into a low volume node, move into a deviation level, move into an untap. We're trimming here 100,000,000%. There's really no reason to trim here. I have no reason to trim here. Let's go to ES to see if there's an untap that we might have moved into that might have a reason to. No reason to trim here. I'm not going to trim here. We already did our trim. We already reduced our position size here. I guess my longs are gone. Maybe it took on ES. I guess my longs are gone. Whatever. So 100%, we took our trim at that set of untapped FFEGs. Now this wasn't a reaction to anything, so obviously it's just a structural pointer. There's no reason to get out. Notice we're getting choppier price action. We're getting less optimal price action in or around our recent trim. If you're trimming, this is the kind of a litmus test. If you're trimming your position down and the trade is dumping harder or moving higher, then your way of trimming is not valid. It's just not a good way to trim. If you're taking positions out and the market's reacting, then what you just did was successful. And I would say that was successful, right? Price is slowing down, albeit moving higher, slowing down. Why still moving higher? We haven't replaced the point of range control. The active point of range of control is going to be this level down here. This it's actually really cool. The indicator will display it right here. It'll display the area that we're active, and then in price right here, we can see here's your point of range control. We have our New York Open coming up soon. We just want to move between both NQ and ES and see if there's any reason to trim. We tap into a low volume node. Is there anything on ES that we want to trim on? If you want to, you totally can. It depends how many contracts you're in. If you're light, then obviously you can't. You want to find the highest quality trims, but no reason to trim in my opinion. I would have no reason to trim here. Okay, what about now? I would say this is a pretty reasonable area to trim. We just tapped into that untapped set of FFEGs, and we moved into a low volume node and a deviation level at the exact same time. In real time, as price is doing this, as that happened in real time, it would have been a good idea to reduce that position there. Okay, not where we are right now. Let's go ahead and keep it going. We might actually need to increase our viewing distance here. We might need to throw more low volume nodes in here. This is why at the start of a session, it's always a really good idea to do this ahead of time, so you're not like me. Just have them already, set up and ready to go. We have a couple in here that we can use. Mink. That should be fine. Actually, we can do this guy here too. Mink. I'm just doing it really, really less carefully than I would at the start of a session. I usually do this like pre-market. It's part of my pre-market rituals. But yeah, no reason to trim at this point. Still no reason to trim. Coming into another deviation level and a low volume node is our new untapped FFG. It doesn't look like it. If you want to reduce your position size, you totally can, but it's really just the same level that we already reacted to. So if you hadn't before, now is a great opportunity to do so again. We're definitely going to trim here. We hit our trim out at this high here. So if we took 10 contracts, 2 at the first FFG, 2 at the next, 2 there, we're pretty light at this point, right? Probably about 4 contracts into our open. Here's our 930 open coming up in here, and this candle here. We had no news, I don't think, today. I think we had 830 news, that was it. What are we doing on this candle? 100 million, billion, trillion %. We're trimming. Untapped FFEG, deviation, low volume node. This was one that we set up ahead of time that we were gonna be trimming on. Insta dump, but no pointer. What I'm teaching you today is to get ahead of the volume, right? These three principles, untaps, deviations, low volume nodes, are going to be the things that will cause price to move, but the pointer is what's going to confirm market's direction. Conservative on the way in, liberal on the way out. So instead of being fucking heavy size in here, instead of being, you know, fucking, what would the size be at this point? You know, 10, instead of being like 8 micros or 6 micros, we're 2 or 4 micros in a trade that's already run really, really hard. If we go to our entry on ES, where's our entry? It's right here, right? Here's the current active pointer range of control, the one that was our entry. Wait, no, that's not right. It's not ready yet, okay? The indicator is not fucking ready yet. But this is the current active pointer range control. We haven't had anything against that yet. So this is the current active pointer range control and price that we have. We've moved from our entry, we've moved a total of 30 points on ES, approximately, where's the entry? 830, somewhere here, yeah. Approximately 150 points on NQ. You're coming out of that not as fun because you just fucking, you could have saved yourself so many contracts that just lost so much capital. Instead, we can thin that position as it expands. The idea is MEC is validating a high volume area in price, an untapped, pointer reacts to an untapped, high volume area in price and moving towards a low volume area in price. So using and aligning low volume nodes with deviation levels with our untapped FFGs, we can predetermine trim points. So that's how you could have phased out of the trade. Then obviously your full exit would have been on the pointer forming against you, which is going to be a lot higher than where it would be on the displacement down, right? You have to create the untaps and then react. It's not always a good idea to hold a trade into the open though, right? You don't really want to hold trades into the macro. Even if there's a good example of it working, I wouldn't do that. On average, it's just not going to be fun, especially with news, especially in our macro environment now with all this war shit going on. Let's look at some trades that you guys gave me. I know this is a longer video, but I want to make sure that we understand this concept. You guys gave me a little while back. You guys gave me, or at least I asked you to tell me a couple of trades that you guys had taken that I could go through for this particular video. So let's go in here. Let me see. From me, trade from a specific person. Let's go in here and find some working examples. I've not seen these before. I'm looking at them for the first time with you guys here. All right, okay, need your guys' help for a bootcamp video. Okay, let's go to it. We have Brady. Brady's up first again. I've not seen these ahead of time, so I have no idea what I'm getting into. 9:30 Friday, 6/7/2026. I don't want to hear it. Spare me. Mentor 6/7, bro. Mentor 6/7. Dude. I already know 4 of you have already fucking pinged me in Discord. 3 of you have already fucking put the timestamp in the comments. 6/7, bro. Dude, you said SD kid, bro. 6/7 SD kid, bro. Shut up. All right, here we go. 9:36. I think this is right. Friday? Yeah, looks like Friday 9:36 EST. He took a trade at 3:002150. So we're on ES. Let's go to NQ. Let's figure out his pointer entry and let's work our way down here. So here's his trade, little Brady. Gee shit. Let's take a look how we could improve the trims using these new principles that we learned today. I'm assuming this is your pointer. I'm assuming this is your pointer here, and sweat pointer range control. Let's go here. Obviously the rating is going to be lower on this because it's a sweat pointer, lower quality. Let's go into this trade here. I'm assuming it's a reaction to this untapped set there. Boom, there's your reaction, there's your wick, there's your pointer. Minky, minky, minky. Pointer range of control. Now looking, oh, wait a minute. We don't have untaps in price here. I forgot. Beta. That's not good, beta. Not good. Not good. We don't have data here. This is from, since we move so much in price. Surely there's fucking, is it literally just that was the last one that we had? Oh my God. Okay, well, this is gonna be kind of a not as fun example because we don't have that much data here, but we can use it regardless. At least pick price points, and then had there been on taps there, then we could have done that. So we're taking a trade to the downside, right? So we wanna find deviations to draw to the downside. Do we see anything readily available here that looks that great? Not really. Are we respecting any market structure that looks that good? Not really. Fuck, this is a terrible example. We're not really respecting any market structure with clean, strong deviations to draw, in my opinion. I guess you could say, I suppose you could say that this would work. Like this guy here, this isn't half bad. If we were to reverse this, this isn't half bad. It just kind of runs out earlier than I would prefer. We can look to our left-hand side and see if there's anything over here. It's not a great example to work with, if I'm being honest. We might actually make, it looks like we're gonna make one in price, so that's totally fine. We can use low volume nodes though. We can throw in the low volume nodes. This is the worst example we could have used. We have no untaps. We might come back to this one, but let's go and, whoops, not what I wanted to do. Fuck me, bro. There we go. Let's move over here and let's draw our, where's the FMG? There we go. Draw our low volume nodes in here. Okay. Mink, 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 mink. I'm just eyeballing it right now. You want to be a lot more precise with this, obviously, when you're doing this on the open. Just fucking eyeballing it. There we go. Okay. We can even do, let's see, this guy. Mink, 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 mink. Any of those are fine. Just be a lot more concise with it into an open. Okay, cool. Obviously, this is a shit example, but we're definitely gonna trim at this untapped here. No doubt about that. If we had untapped data to work with, then we could use that, but we don't. We can use ESs though, if we have any untapped data. Yeah, we do, and we have a new deviation we can draw. We actually have a deviation. How can we draw this? It's pretty simple. High res high, breaking structure right here. Boom, reverse price. There we go, we have some deviations we can draw. We can do the same thing with ES. High res high, breaking structure. I actually need to move this. And you can use the indicators, high res highs and high res lows to do this. Cool, I wouldn't trim here. There's no reason to trim here. We have no untapped FVGs. I'll just clean this up as we go, just to make it easier for you guys to see. Clean this up as we go. I wouldn't do any trimming here. I would have no reason to trim. There's no reason. Okay, move into a low volume node. What are we doing over here? Tap into an untapped and into a deviation level. I would trim here. I'll reduce the contract size here. So if your entry is here, I would say this is a decent area to trim. Okay, pull back. Dump down to low volume node and deviation levels, check ES, and tap into a 5-minute untapped. I'm gonna trim here as well. Pull back. I'm just saying. And then I'm assuming your exit was somewhere in here off of that untapped. Yeah, 3-minute off the untapped. So you were able to scale out of this trade before our exit even happened. Our exit condition was here, we had scaled out here, we had scaled out here. Our average price comes around to the pointer here, so this is an okay example. Let's go to another one where we actually have untapped data to work with. But that was one example of how you could have used this there. Let's go to the next example. Let's see, it's kind of a long video, I apologize. We got Wednesday from Nikolai, Wednesday, July 3rd. Nope, that doesn't make any sense. 3rd of July, I'm gonna skip you, that doesn't make any sense. 5th of June from our boy, nope, we just did this example, this was Prim. There you go. We've got Friday, damn, all you guys took these trades on Friday. I can't do anything here, guys. This data fucking blows titties, bro. Give me a better example. All you guys did Friday. May 22nd. Okay, here we go. May 22nd at 9:50. Goger. Goger. Shout out Goger. Real troopers only. Get the indicator. Indicator money. Prindicator money. May 22nd. Let's go to May 22nd here. By the way, live streams are back. I've just had court fucking all week, so I've been getting cooked. They denied me because I had a bust down Cartier on the first time, and then the second time I had to come back. So it's like, bro, lock in, Swin. All right, May 22nd. Where are we at with it? Oh my God, bro. Should have asked recent examples. I should have made the video when I said I was going to. Alrighty. Again, this is all reliant on you guys taking winning trades. So the point is not to have questions about mech, but to have questions about, oh my God, we genuinely just don't have data here. All right, fuck it. Using you guys examples is just not gonna work. We have like all-time high, then all-time dump lows, fucking, we've had crazy price action, so obviously we don't have great examples. We'll just go over fucking my examples then. We'll just go over another example that I can come up with of a trade that I might have taken. We can use this guy here. Let's look at this here. Let's draw, and let's figure out how we could have...
Sorry, I'm having trouble connecting to the internet. It looks like an issue with the router and Echo device, so try restarting them.
I don't care.
Unplug both of them, then plug the router back in. Wait 30 seconds. Once the router is back on and connected to the internet, plug in the Echo device.
I don't know if I should take the trade. I think it was this one right here. I think it was this guy here. I believe it was this one. I'm trying to remember. I think it was this guy. I know it's like long. Where was it? When was the SpaceX IPO? Was that recently? Was the SpaceX IPO recently? That was last Friday, right? It took some type of long, I think. This one looks pretty good. Let's try this one. Minky Mink, anything in here? Maybe not. Maybe not. It might have been a higher up. What about this guy? Looks a little bit mechy. No, maybe something higher up. Okay, yeah, this is mechy. Okay, yeah, this is very mechy. We can do this. This works. 5-minute pointer off on tap. Let's draw low volume node. Let's draw deviations. Let's get it started. Okay, just root it. Get enough data in here. That'll work. Let's draw our deviations in price. What are we respecting? We're respecting this market structure. We don't have anything in here that we can really draw. This is kind of brutal. It's just chop. We're respecting this market structure to the upside. You can see these wicks are respecting this market structure to the upside. We can kind of draw something in here, not really, nothing really that great. I would say just use the most obvious one, like this guy here. This is a good deviation to draw. Very narrow though, so it's not going to be good enough for our purposes, so can't really use that. Might not be able to draw a decent deviation off of this. Might have to draw something new. We could do we can root it at a different breaking structure. That's totally fine as well. We can root it at this breaking structure. We can root it at this breaking structure. We can root it at that breaking structure. Any of those are fine. We'll go with this one. This one's okay. We'll use ES as well. And then if we make any new ones that we can use that as well. We can draw both too if you want. We can have both these in here. Where is it? This guy here. This sweep. Cool. We can use both of these. And then let's go in here and let's draw low volume nodes. Again, we're just going to keep this quick and easy. I'm going to delete the deviations for now, actually, so you can see. I'll just keep it quick and easy. Mink, 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 mink. Yeah, that'll be fine for now. Let's go ahead and let's go to ES. Let's figure out, do we have any deviations we could draw in here? Not really. We're respecting this market structure back here to this left-hand side. We can draw deviations with this. Higher is high, any decent breaking structure. Yeah, this one's okay. This one's not bad. We can draw it from there. And we have our deviations plotted. Cool. Back to NQ. Cool. So what do we want to trim on? Oh, we need our deviations here. This will work. And this will work. Cool. What FFGs do we definitely want to trim on ahead of time? We 100% want to trim on this right here. No doubt about it. There's a lot of low volume nodes in here and a lot of deviations in there and probably some untapped. So maybe that untapped would be a good candidate for a trim. I don't know, could be a good candidate. Let's get started. Okay, what do we tap into? A low volume node and a deviation level. Go to ES. Any untaps? No untaps. I'm gonna be honest with you guys, I'm probably not gonna trim here. I'm probably not gonna trim. No trim for me. Moved into, that's our untapped and a deviation level. I'm probably gonna trim on that. Yeah, I'm gonna go ahead and trim on that. 100%. We actually ran out of deviations, but we have a new deviation that we can draw, which would replace all of our other previous deviations. Take a look. New high was high, new high was low. Mink, mink. Totally valid. We might need more low volume nodes in here, if I'm being honest with you guys. Matter of fact, let's go to I know this video's all over the place. I'm just kind of winging it. Let's go to recent price action. We'll go to trades that you guys took. I don't know why I didn't do this the first time. Let's go to the profit channel. Fuck it. Let's go to the profit channel. Let's do it right now. Okay, Ed, lucky candidate. Ed NQ, brutal name. Ed NQ, entered off of this pointer here. This is a recent price action. This literally just happened. We can do it right now in front of your dome. I don't know why I fucking did all the other bullshit. Let's draw our deviations first. Here is our entry. Edward, decent trade. Here is our entry off of our untapped FFG. Let's identify our deviations. There's really nothing good in here that I would want to maybe draw. There's nothing really good in here. We can technically draw inverse deviations here. We can do an inverse deviation. That's not that bad. There's not really any 5-minute market structure that looks that good for this. Nothing really that holds up since we kind of just ended up consolidating. We can look a little further back. Yeah, man, none of this is that great. I'm not gonna lie, none of this is really that great. Yeah, this is all kind of poop. Can't lie. Suppose this could be okay. Let's look at ES. See if ES has any better looks to it. Yeah, this is actually a little better. This is decent. We can do, this is our low, our last low, and then we can use, this one's okay. I would be fine if we use this one. We can also use this. Either of these are totally valid deviations to draw. We'll use ES's deviations for now. And let's go on here and let's throw on the volume profile for the day. Minky will go here. Oh, we're gonna have to go higher. I forgot we have all those highs. Cool. And then we'll go in here and we'll draw all of our low volume nodes on NQ. Mink. Yeah, it's good. Just eyeballing it. So here's our long. And let's go to ES. Do we have any first presented FFGs in range? No. So we're not going to do a trim. We're not going to run a trim in price yet. There's no reason to. I wouldn't front run a trim on the FFG. I would probably say this would be a good target FFG for our trim. I'm not trimming here. I would not trim here. I would say there's no point in reducing your contracts to this. I would reduce my contracts here. Let's go to ES. Yeah, we tapped into a deviation level and we tapped into our untapped and low volume node. We can draw a breaking structure deviation if we can clear that high, but I would definitely trim there. Unless we get our reason exit, exit confirmation. Wait, he exited. Let's just see what he did. Let's get signaled. He exited at, what is this, 12:19? So literally on this candle, this next candle. Oh, he exited before that. He exited on this candle. I don't know if that's necessarily valid, but the entry was fine. This trade isn't finished yet, but I don't know if that was necessarily valid unless ES did something, unless ES reacted with that. I don't know if that was valid, but I don't think the exit was valid there yet. I mean, he was on an eval. It looks like he might have made $1,500 on this, so maybe not a valid exit, but that was a good trim. I'd say that was a good trim. Let's look at another example from chat. Let's see. We've got, man, all you are posting profit, but not showing the trades. I can't do anything with this. Okay, we got Mamu with this this trade at 6:16. Okay. It is a short. Oh no, why did my shit just die? Hold on. It's a short at 11 on the 16th. This guy here. Ooh, okay. Okay, this doesn't look bad. Was this the one I was looking at before? I think so. Looks like he took our short here. So here's his entrance for the short. Here's his entry for the short. This is a great example. We can do a lot with this one. Let's draw our low volume nodes. Let's draw our deviations. Minky, minky, mink, mink, mink. This should be fine. Mink, 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 mink. That'll be fine. Now let's draw our deviations. Any deviations that we can draw in price? Yeah, we can do something up here. High res high, break in structure. That's one that's totally valid. Anything to our left-hand side, like an inverse deviation. This wick is respecting, look at this area. Follow the wick, it's respecting this area in the price. You could draw an inverse deviation from here to here if you'd like, and then reverse that. This is valid. Either one of those is totally fine to use. You can use both. You can use either one, I don't care. Just do it consistently and do not care. You can draw new ones that form in price. We'll use both for now. Let's go to ES and draw deviations. We need to get rid of all of our other stuff on here from before. Let's draw our deviation. Mink. Mink. Reverse that. And then what are we respecting? Any mark structure? Not really. Nothing that looks that good. Back to NQ. All right, so he's in this short. Any untaps that we want to say ahead of time that we want to trim on? Yeah, 100%. I would say a key area of interest would be this guy here. So we'll go ahead and reduce our contract size here, and we'll reduce our contract size here. These are going to be our two F50s that we want to reduce our position size on. He took this trade all the way down to 3652, which is am I smoking methamphetamine? His entry was at 3.8. Oh, his entry was way higher. Oh, he's probably in a different time zone. His entry was way higher. Oh, well, this is totally fine. We can look at this as well. Both these are valid trades. We can look at this one as well. We can do this in real time. We'll look at his trade too. This will be the last example because I'm fucking going crazy here. I would say this would be a decent reason to trim. Move into the untap, move into the low volume node, move into deviation. That would be a decent reason to trim. These are our two fixed trims, 100%. We're gonna trim on those. His is way higher. His entrance was way higher. I'm trimming there. I'm reducing my contract size there. Pull back. I'm reducing my contract size there, 100%. A billion% reducing my contract size. Ooh, aggressive move back into our area. There's probably a reason to get out somewhere in here. Maybe not. Just looking for disassociation between NQ or ES, between either equity. Probably missed it at this point. Oh yeah, we done missed that shit. Literally happened in the range that we were trimming it. So we saved ourselves a lot of fucking pain in there just using this principle. But let's go to the one that he took. It was way, way, way higher. I don't know how I missed that. Way higher. Somewhere up here. Yeah, this is his trade. This is his trade up here. So this was his entry. This was what he was looking at. Do the exact same thing we were doing before. Mink. This one would be fine. Wait, we already fucking looked at this. Am I smoking meth? I swear to God, we already looked at this example. I need to get off. I need to get the fuck off. We'll do a different guy. We already looked at this example. We'll do a different guy. Okay, this guy's fucking retarded. Nikolai, you're fucking, what even is this? We're not gonna use that. Ed and Q with another trade. 612. This will be our last example. I know this is a long fucking video. My bad. Last example before I get the fuck out of here, because this is really just something that you guys are gonna have to back test. Asia. Oh, Ed, I don't want to fucking look at this, bro. Ugh. Okay, whatever. Fucking Asia, whatever, dude. You're so fucking cool, Ed. Fucking loser, bro. What are you doing trading Asia? Surely you have better things to do, bro. What are we? Okay, his trade was somewhere in here. This is his trade. This is gonna be a good trade though, actually. Let's see. Where was his entry? 3 minute time? No. What was his entry? Here's his trade for confirmation, just so you guys can see. Ed NQ. Join the Discord, join the troop. Come on now, lock in. What was his entry? Edward, buddy, what was your entry? Was there a point range control and then correlation? Oh, okay. Okay, handsome. Right here, here's his entrance, 3-minute pointer. Correlation, there was previous bullish point range control. Okay, he took a short and then a long after this. We have a lot to go over. We have this whole thing. I'm only gonna do the long because fuck you. So that's his entrance. That's his entry. Let's look at deviations. Let's look at B volume profile. Mink. All right, let's draw our low volume nodes. Minky. Ooh, this one's like dog shit. Let's root it a little bit higher. Mink. Oh, that might actually be a little bit too big. A little bit too big. Little bit. We might have to work with it. That's fine. That's fine. We'll just use the one that we had before. It's just going to be a little bit lower quality. I just didn't want to have to zoom in here. Okay. Mink, 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 mink. More often than not, your fucking volume profile will look like this when you first get it, like super fucking big and just unusable. So there's our low volume nodes. Let's go and identify our deviations. You can see we were expecting this area market structure over here. Any deviations we can draw from this, nothing that looks that great, to be honest. I guess you could do this high res low to this high res high. That one's fine. Either one of those is, I'd say is good. This one there or that one there, those are totally fine. We see those FFEGs. That's if you want to draw these deviations properly, your eye should be drawn to the FFEGs and then find the high res low and then find the high res high that created the FFEGs. So that would be a good area. Yeah, this looks fine. Let's go to ES and draw deviations. Any market structure that we're respecting, it looks like we are. We have this high res low and then we have this high res high. That's totally fine. Cool. Let's predetermine areas that we want to trim on. We'll mark them out ahead of time. I would say a good area to trim on just ahead of time is going to be, there's a bunch of reasons why this one's valid. It's the first FFG in range, low volume node, deviation. I would say first trim point is going to be here. I would say that besides that, I wouldn't have any other real reason to trim unless ES correlates. I wouldn't want to trim any more than that. And this is, you can see in price ahead of time. Lock in. Bro, whatever, you can fucking see. There's not real reason to trim it other than that. Okay, so that was his entry. I'm not trimming there. I'd probably reduce my contract size in this wick here. I mean, it's basically the tap. It's just mink it there. There's your mink. Reduce your contract size, 100%. And you can set limit orders in the point range control if you wanted to. Now let's move back into ES because this is a big ass fucking candle. Let's move back into ES and see if there was, you know, an untap we wanted to trim on in here. That might have looked good. We're looking at price here. Nothing ahead of time. Let's go look at ES. We do have untaps here. So if we move into those untaps at the same time that NQ moves into its deviation and its low volume nodes, then that would be a good untap to trim on. You want to use the untap as the frame of reference. There was an untap set here, and that was probably decent. Like there was this 5 in here that you could have used. So I would say that would have been a decent trim to take there. But that's about it. I wouldn't do any more aggressive trimming. That was our first trim, that was our second trim. Really no reason to do anything else here. Let's take a look, move into a low volume node, anything on ES, move into an untap. I would say maybe reduce your size there as well. It's probably a good idea. I think he queued for shorts sometime in here as well. Somewhere in here. Now we have a 5-minute pointer right here, so you could use a swept pointer to reduce your size if we traded, you know, away from that. We did not. No reason to trim, I don't think. Run it back, one more candle. No, I wouldn't trim. I wouldn't reduce anymore. We have untaps incoming. There's that untap tap into a deviation level, and I believe into a low volume node on NQ. No, not a low volume node on NQ, just deviation. I would probably trim here too. I'd probably take another trim. Probably in like 4 contracts now, I'd say. Another 5-minute swept, you can reduce your position size in that. I think that was his exit. It looks like that was his exit, yeah. Boom, there you go. Mink, cool. It's not always gonna work out like this where the pointer comes after your trims. More often than not, you're gonna take trades who whose pointer is going to come after your trims or around your trims. Like you're often going to see that when you're reducing your size, the pointer will land somewhere in that range. It's just how it's going to work in most cases, especially as you pull towards PO3, because think about it. PO3 is basically just a shelf, a compressed shelf of volume, and what is a pointer? It's a reaction of volume, a reaction of an FFVG, and PO3 is multiple reactions off of FFVGs. Ample amount of volume in a tight area and price, pointers reacting to that, just converging into one another. And so obviously, when you're moving from a high volume area to a low volume area, which is what our targets are, and then you react to that, and then you come to that PO3, the price is going to pull into that area where the most amount of volume is traded in, which were our trims. So pretty simple stuff. The deviations can be a little bit tricky. That's why I should try to show as many examples as I could. Hopefully it makes sense. If you have any questions, leave them in the comments below. I know it's a super long video, but I mean, you guys probably won't complain. So if you have any questions, let me know, and I will see you guys in the next video. Deuces.